This screencast is going to give you a full run through of the Olata question, again to help you revise what we would cover in class in terms of part 1 and help you walk through part 2 in terms of looking at activity-based costing. So again, ideally you'll have looked back over the material in the notes to the class lesson, and you'll also have attempted the question yourself and use this then as a walkthrough for particular sections that you found difficult. So you'll only get the benefit if you try it yourself initially. So hopefully you've read through the question. We see we have a similar, common enough situation where you have one high volume product. So alpha is clearly a high volume, 500,000 units of a white label, or that could be called a private label good. Where then they have also an own brand product, which is a special order basis only and relatively low volume. So we see here, producing large batches in high volume is alpha, and then low batches because of special order, and low volume for beta. So what we're asked to do here is prepare a summary overall cost structure. So we want to look at all the costs in absolute and relevant terms. So absolute means in euro amounts, and relative terms means what percentage of the cost base is materials, what percentage is labour, and what percentage is manufacturing overhead. And then part 2 asks you to calculate the product cost for alpha and beta for 1 unit each using the traditional method of overhead absorption. So we're going to use direct labour hours because that's what you're told in the question. So your first starting point is what's the cost structure. So we just use an Excel. So make this a bit bigger. So the cost structure is made up of direct materials, direct labour, and then we just come down here, the manufacturing overhead. So these two would be called direct costs because you can trace it directly to the unit, whereas this manufacturing overhead, so factory costs that cannot be traced, is typically called an overhead or an indirect cost. So there's two different types of costs, and of course we're going to look at it for alpha, for beta, and then in total. The total company has only 2 products, Olata. So the total direct materials for alpha would be 500,000 units at €20 per unit. So remember, if we can trace it to each unit, then it's a direct cost. So in this case, we can trace it. We know it's €20 per unit. So based on whatever analysis has been done by the company. So we just multiply by the number of units. So just tidy this up to make sure it's easy to read. Similarly for beta, they have only 50,000 units, and it's actually costs more material per unit. It costs 28. So that's 1.4 million. So the total direct materials for Olata will be the two added together, which is 11.4 million. So we're just taking the units times the cost per unit. Exact same logic then for alpha. It's 500,000 units times 1125. And 50,000, should I say, units of beta times 30. So it costs more labour per unit for beta than it does for alpha. So now we have the direct labour for alpha and beta, and the total direct labour then is about 7 million. So what we might do there is total direct cost as a subtotal to tell us, well, what's the total direct cost across each of the products. So the total direct cost there is about 15.5 million, which is just materials and labour added together, and it's 2.9 million for beta. So all you're doing is adding the two direct costs together. And similarly for the total direct cost for Olata as a firm is 18.5 million. Now the manufacturing overhead, all we have currently told is 9.5 million. So we can't put it in either of these columns because we don't have the split. So all we know then is the total cost for the firm is the direct plus the indirect, which gets us to 28 million, or just over 28 million. And that gives us the absolute overall cost structure. There's 18 million in direct costs and 9.5 million in indirect costs. You're also then asked for it in relative terms. Now what relative terms means is what percentage of the cost base, so it's 18 over 28, is direct, and what percentage is indirect. And of course, Let's make the percentages. Make sure I'm divided by the right one. So you put 18 over 28 to get the percentage of direct costs, which is 66. And then 9.5 over 28 to get the percentage indirect costs, which is 34. So again, all we're trying to do there is set the scene in terms of what type of cost structure is in this business. And the comment is going to be very straightforward to say that 1/3 of this cost structure is actually indirect costs. So that will be important about how you allocate that cost to products. Because if you get 1/3 of your cost base allocated incorrectly, that will lead to wrong costing figures and ultimately lead to wrong decisions. Whether it's a benchmarking decision, an outsourcing decision, probably not for products, but it's more so around the pricing decision in terms of pricing your products vis-a-vis your costs. So that's your first element, is to understand what the cost structure is and understand then what you're being asked for in terms of being absolute and relative terms. The second question then is getting the crux of, well, what's the cost per unit? And remember, we have a lot of this work done already. We know the direct cost for each of alpha and beta. So the total, what we call the direct cost per unit. Now remember, one thing about all of these questions is there's plenty of ways to go about this. You may not have laid it out exactly like this, and that's fine. As long as I can see your workings, number one, and number two, that it's clear that you've come to the same answer, that is perfect. So some ways, some students may skip some steps, but if I can see your logic, you don't have to go all the detail of that. But you have to show where your figures are coming from. So the direct cost per unit then, well, for alpha and beta, that should be relatively straightforward from the question. And there's two ways students may go about this. You'll either add 20 plus 11.25, so saying the direct cost which you're given in the question, which gets us to 31.25. So we'll just tidy up these. Alternatively, you could just say it's the 15,625, which is the total direct cost of alpha, divided by the number of units. And that will also get you to 31.25. So either way is acceptable, and that's fine as long as you get to the answer. Same for beta, it's going to be 28 plus 30, which is 58. And you'll also get the 58 by dividing the 2.9 million by 50,000 units, which gets you the direct cost per unit. So either way is fine. However, where the calculation requires is the indirect cost per unit. So we have this 9.5 million here, and the problem is we don't know how to allocate it to alpha and beta. And we're told here you don't allocate it half and half, you're going to allocate it based on direct labor hours. So the logic here is the more hours each product uses, the more allocation of overhead it gets. So you're just trying to get some basis to say this is the fairest way that we're going to spread the 9.5 million. So the 9.5 million has to be allocated to products, and we're saying the best estimate we have now is direct labor hours. So you first get the direct labor hours for each of them. So you need to get the total direct labor hours first, and then you figure out the rate per hour. So remember, go back to your slides in that regard. So you estimate the total manufacturing overhead. We have that, it's 9.5 million. We know the cost driver, we've identified just one, it's direct labor hours. So now we need to get the overhead absorption rate, sometimes it's called the allocation rate, i.e. how much overhead should I allocate to each labor hour. So to get that, we need to get the total labor hours and divide that into the indirect costs. That will give us an overhead rate per labor hour. And that will allocate it then to the products alpha and beta because we know how much hours they take. So in this regard, the total hours for alpha is 500,000 units times 0.375 because every unit produced only uses 37.5% of an hour. So it uses 187,500 hours. Similarly for beta, they have 50,000 units And each unit actually takes an hour here, because again, it's special order made, it's probably more labor intensive. So that means in total, you're going to have 237,500 labor hours. So we had 237,500 labor hours, and we need to allocate the 9.5 million over that. That's to the 9.5. So you're saying for every hour worked, you'll have to allocate 40 euro. So when you allocate the full 237,500, you'll have allocated all the overhead. And that's what you want to have at the end of the year. So that means, and there's a number of ways you can do this. One possible way is to say, well, it's 40 euro per labor hour. So to allocate the cost of the overhead, it's 40 times 0.375, because every unit, when we're on it per unit here, takes 0.375 hours for alpha, but it's 40 times 1 for beta, because each unit of beta takes 1 labor hour. So that is one way of going about it, and that is fine. Other students may do it the total way. So for example, they will say the indirect overhead, it'll be 40 times 187,500 for alpha in total, and it will be 40 times 50,000 for beta. So you'll notice here that by allocating all the hours out, we've also allocated out the full 9.5 million. And just to sense check that our answer is correct, this is the total amount for alpha, which is 500,000 units, and this is the total for beta, which is 50,000. If we get it on a per unit basis, so 7,500, 7.5 million should I say, divided by the units of alpha, gets us to 15, so we know we're correct. And also if we divide in the total indirect overhead allocated to all of beta by the number of beta units, it gets us to 40 as well, so we know we're correct. So I said that's just to illustrate, you don't have to do both methods, but to illustrate that both are equally acceptable and they will come to the same answer. So the cost per unit here is indirect plus direct, 46.25 and 98. And that's what you're asked, so make sure you answer what's asked. Calculate the product cost of 1 unit of alpha and 1 unit of beta. So that's your 46.25 and your 98. And that's your starting point. It's not the best overhead method because it's very crude assumption, but it's a starting point. And what we're going to look at in part 2 then is if we try and refine our assumptions and use what's called activity-based costing, so a bit more refined, we may see a bit more of an accurate reflection, and it may differ from this. Alright, so hopefully you've understood that and followed it. If you have, please go on to part 2 now and read down through the question. So look at the slides first to understand the difference with activity-based costing. In particular, how we now, this particular slide, how we're going and we're looking at focusing on activities. So we're saying a cost object consumes activities. Right? So projects like even products like alpha and beta consume deliveries. They use deliveries. They use retoolings. Right? They use a lot of material handling. And all those activities drive costs. So what we're going to do is look at different pools of activities and what we call associated cost pools. So the total 9.5 million that we have now split because someone has done a bit more of an analysis. And we've split it into 4 cost pools, or 4 major activities in the organization. And we're going to get a bit more accurate and say, look, let's not just look at one generic cost pool. Let's break it into 4 and let's get more accurate cost drivers to fairly allocate costs. So hopefully you've had to try this. If not, pause it and make an attempt at the question. You're asked to calculate the product cost, as we've done here, of 1 unit of alpha and 1 unit of beta. That should be a unit. And briefly compare this to what we've calculated in A. So hopefully what you're seeing here is you have 4 different cost pools, and for each of the overhead costs, you're told a particular driver, either production runs, deliveries, or machine hours. So we'll notice here now we're not even using labor hours. So we're saying there's more relevant cost drivers there that will more accurately reflect how much of the resources each product consumes. Because remember, that's what we're interested in. We're interested in how much of each activity does a product consume. We want the best driver of that. So the way you approach the ABC is very similar to the way you approach the traditional. The only difference is you're going to be doing it multiple times because you're going to have multiple different cost pools. So what you're still going to do is take each cost pool separately and take each driver separately and allocate across. So for example, your starting point, we're getting the cost per unit under ABC. And the first key point to remember is, and it's important to remember this, for alpha and beta, the direct cost per unit does not change. So think about that. ABC has nothing to do with direct costs. It's only to do with the 9.5 million overhead. The direct cost per unit of labour and materials does not change. That will always be the same because there's no issue with that. We can directly trace that and that is accurate. What there will be a change in is the indirect. And where we're going to find differences there is how we're going to allocate it across. Before we said the best basis we have is €40 per labour hour. And now we're saying that's not really accurate enough. Let's go a bit more detail. So we're going to look at indirect labour. We're going to look at retooling. We're going to look at handling. And we're going to look at electricity. And you're told in the question which cost drivers you should use. So we're saying the best approximate driver of indirect labour cost is production runs. The logic being the more production runs you have, the more indirect labour you're going to have. And what they say is the total of that, of indirect labour, so this should be an R, is 3 million. Right, so I'll just tidy these up to make sure they're all the same format. So it's 3 million euros, and we're saying the driver there is 1,500 production runs. So it's important you get the insight here, so I'll just open up this. This is where they're coming from. So indirect labour 3 million, production runs 1,500. So I'll just open up this for a second. So that means the cost per driver here is, for every production run, it's costing you €2,000. So that's a good insight. Now, you technically don't have to do it this way. There's shorter ways to do it, and that's fine. But in terms of getting managerial insight, particularly when we come on to next week about activity-based management, that is a key insight, to know how much it is costing you per production run. And the logic is then, for alpha and for beta, you allocate based on the number of production runs they use. Alpha has 500 runs, beta has 1,000 runs. So it's 500 times the cost, and 1,000 times the cost. So the 500 comes from alpha use 500 production runs, whereas beta, because it's a low volume one, special order, uses twice as many. Now, of course, the quick among us will realize actually the relationship is just 1/3 is to 2/3, and I could have split it on that basis, and that's fine. But in some exam questions, you may be asked to get some insight from the cost per driver, particularly when we start talking about activity-based management, that you will have to do these calculations. So they're helpful as you go through these practice questions. And all you'll start to see now is its repetition. We take the total cost, which is 1.5 million for retooling. Extra zero. Handling is 2.7 million. And electricity is 2.3 million. And it's still the 9.5 million overall, so don't remember, we're not changing the total, we're just splitting it up into smaller cost pools. We take the driver for each. The driver for retooling is again 1500. So don't be afraid to pause this now and try it yourself, and then pick it up where you struggle. So there's no point waiting for the solution, because again, you're not going to learn. The handling, the driver is number of deliveries, 600. So for example, that's your 600. And then finally, this is the number of machine hours, which is 115,000. So the cost per driver here is per production run. Similarly here, the cost here is 1,000 per production run. I'll just tidy up the formats there so it's easy to read. Now be careful here, because we're actually allocating the 2.7 million here. We're saying production run's probably not the best proxy there, it's the number of deliveries. The more deliveries you have, the more handling of materials and associated costs, which makes sense. And what you'll see here is the low volume special order product has 4 times more deliveries. So that's generating a lot of cost that we would not have captured in the traditional method. So here, the cost per delivery is estimated to be about 4,500. So that's a very good insight for managing that, to suggest those deliveries are very costly. So if we're going to have that amount of deliveries, we better make sure we're going to charge for them. And that's what we're going to look at next week in activity-based management. And finally then, electricity per machine hour is coming out at about 20 euro. So per machine hour is about 20 euro. And what we're going to do then is take this essentially activity-based measures, the cost per driver, which from a managerial perspective is informative as well, and divvy up that between alpha and beta. So we know from before, alpha still have 500 production runs, so they're going to get 500,000, and beta have 1,000, so they're going to get the cost per driver times 1,000. And again, you'll see it's 1/3 as to 2/3, because we're still using the production run as the driver. Here, you'll realize it's going to be 1/5 to 4/5. That's the split here. The cost per delivery is 4.5 grand. Beta used 120 deliveries, whereas, alpha used 120 deliveries, whereas beta used 480. So 4/5 of the cost goes to beta, whereas 1/5 goes to alpha, because they do not use as many deliveries. And finally then, in terms of, well, how many machine hours is alpha using? 70,000 times 20 euro per hour. And then it's 45,000 for beta times 20 euro per hour. So the key thing to note is here, we're still allocating the full cost. So 3 million allocated for indirect labour, 1.5 million for retooling, 2.7 for handling, and 2.3. But what we're doing is we're using different apportionment ratios depending on what we think the most appropriate cost driver is. So overall, if you add them up, there is 3.4 million going to alpha and 6 million going to beta. So that's a big change. There's a lot more going to beta than there is alpha. And even if you look up here what we looked at before, what was happening? We were giving 7.5 to alpha and 2 to beta. So that's a completely different change than what we're looking at here. Beta are now getting nearly twice as much as alpha. So that's a big insight, and we'll come to discuss that in a second. But of course that doesn't give us the answer, because we want it on a per unit basis. So 3.4 million overheads to alpha divided by the number of units, that's wrong, is about €6.88. Whereas for beta it's 6 million overheads across 50,000 units, which is about €121 of overheads. So when we bring that together now, the total cost per unit is direct plus indirect is 38 here for alpha and 179 for beta. So the key insight was there. Direct cost remains the same. How it changes is going through this table. It's the exact same as we've done. You get the driver and you allocate out. But the key thing is you're doing it multiple times to get a bit more of an accurate reflection. So that answers some of the second part. Calculate the product cost using ABC, and now briefly compare the costs using traditional, which was part 1, and ABC, which was this part 2 of the Olata question. And this is a common part to exam questions where you're asked to interpret. So if we put it in a little table to make it easier, we have traditional and we have ABC. So I'll just copy these down just so it's easy to see. So the activity-based costing is 38 and 179. And the traditional, as we come up here, is 46 and 98. So straight away we can see there's a dramatic difference, particularly with respect to beta. And you have to try and figure out then, you're trying to briefly explain what's going on. Well, the key point is the difference in how we allocate the 9.5 million. In the traditional, if you go back, we allocated based on direct labour hours. The logic being the more hours of labour you used, the more overheads you consumed. So because alpha, and remember always watching the question, alpha in the question was high volume. So high volume, large batches. So more volume, more labour hours. Whereas beta was low volume and a special order basis. So by using this traditional method, we weighted a lot of the overheads towards the high volume product, even though it may not necessarily use or consume the activities that generate the overheads. So we allocated 7.5 million to alpha and only 2 million to beta. Whereas when we come back and actually looked at what's going on, i.e. going back to ABC and looked at the activities, you could clearly see from the question, beta was consuming a lot more activities that were driving costs. Twice as many production runs, 4 times as many deliveries, and even though they used less machine hours, they still used a lot of machine hours for 50,000 units. Whereas 10 times the amount of units only use 70,000 machine hours. So vis-a-vis their volume, they still use a disproportionate amount more of machine hours in compared to alpha. And they are the key reasons of why when we use activity-based costing, it's a lot higher. And what we're looking for here is, in the traditional, alpha was overcosted. It was given too much of the overheads, meaning it was overcosted, and perhaps then you'll end up pricing yourself out of the market because you're basing your cost on 46 instead of 38. Whereas the opposite is probably the case for your special order beta, that you've undercosted. So you're probably charging too little in the market and actually you're making a loss because the true cost of that is about €179. So they are the key issues you should be able to discuss, and that's particularly important for the final exam where you're looking for MBA students to actually interpret what does that mean. It means you may need to reassess your product portfolio mix and where you're prioritizing, and you may need to reassess your pricing strategies because actually it's nearly twice as dear in terms of costing, and this one has fallen. It's really only, if you look in percentage terms, about 82% of what you initially thought it cost. So they're the key things as a good question of activity-based costing, just to introduce you to the area. So make sure you go back and practice that now. Part 1 looks at the traditional system, and Part 2 then looks at activity-based costing and discussing the key differences.